may actually be, I think it could totally be a net positive for the AI industry at large.
Hey, listen, one thing that jumped out for me too is Sam Altman, of course, of OpenAI. You include in the story that he's told his OpenAI employees that his startup is trying to understand if and to what extent DeepSeek's performance is the result of distilling OpenAI's models, that is, using the outputs of that company's AI to train a different model to have similar capabilities, or represents an independent research breakthrough, according to a person familiar. I mean, that distinction would be important to know.
Yeah, and I am sure that OpenAI is looking into that. I mean, they don't want people training on the outputs of their models. They're pretty upfront about that. If somebody did that, then that would certainly make OpenAI upset. I have no way of knowing if that's what this company did, but it is true that there are people that are wondering if that is what happened and trying to figure it out.
What happens if that is what happened?
Well, that remains to be seen, I guess. It could certainly lead to issues of, I mean, it could be problematic for them, perhaps legally. I'm really not sure. We would have to know exactly what happened, though.
Hey, Rachel, in the U.S.-China, I feel like tech war, right, that we've been talking about for years. If indeed they did what they said they did, what does that kind of maybe tell you about the expertise and knowledge and abilities of Chinese scientists, Chinese R&D, and Chinese tech? And just got about 30 seconds.
I think it just reinforces the fact that there are really smart people in AI all over the world. And I think we have long known that there are lots of smart people working on AI in China. And this just makes that extra super clear, that companies in the US need to pay attention to what's happening, not just in China, but all over the world, because there is talent everywhere. And a lot of people want to make their mark in this field.
All right, we're going to leave it on that note. Great story, great deep dive into a story that we are still kind of all obsessed about, safe to say. Bloomberg News AI reporter Rachel Metz. Check her out at Rachel Metz on X. You can also find her story at Bloomberg.com and on the Bloomberg terminal. NVIDIA shares, by the way, up 8% after losing about 17% yesterday.
Okay, still got a ways to go. Hey, he's been crowned the head of DOGE, the Department of Government Efficiency, and yet his own company's spending shows otherwise. That's next.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, yes, indeed, everybody. I'm Carol Masser along with Tim Stenovec live here on Bloomberg Business Week. Well, he, not Tim, he is the king of Doge, well, at least a federal government worker, as we have learned and we've been reading about here at Bloomberg, who's been tasked with heading up the Department of Government Efficiency. His mission is to stop wasteful spending in Washington and slash the federal workforce under President Trump. We are talking about the first buddy, Elon Musk.
Writing about how his expertise on efficiency might be debatable is a Bloomberg News senior technology reporter, Dana Hull, who joins us from San Francisco. Dana, you've reported on Elon for a very long time. It's hard to ignore the companies that he's built, the wealth he's created for himself. And yet, when one thinks about Elon, does efficiency come to mind?
Well, that's what sort of really leaps out at me as we kind of go forth with the Trump administration and this Doge project of Musk's is that, no, it doesn't really. And so I'm just sort of curious as to how this whole idea of Musk as an efficiency guru has come to be. And so I guess the first point is that Musk really pitched this role for himself to Trump when he hosted Trump on X back in August. But if you look at the history of Tesla, for example, there are countless times when like decisions have been made that were not particularly efficient. And to his credit, Musk has been very frank about this, like on earnings calls and on X. But yeah, like efficiency, like that has to mean more than just being willing to fire people. And I just think it's worth noting that there have been a lot of inefficiencies at his companies.
Well, and you go into it, urgency over financial discipline, trial and error methods, not scream efficiency.
Yeah, and I think it's also important to know that, big engineering companies like Tesla and SpaceX, they learn by doing and they learn by making mistakes. And one of the great things about both companies is that they iterate constantly and they try new things and they try new processes. And then if they don't work, they quickly pivot and try something new. And that's why it's exciting to work for those companies. But that's not how the federal government works. The federal government doesn't have the luxury of being able to try something and then fail. That's not what the American people expect. And so the metric of efficiency is just very different if you look at a company like Tesla and SpaceX versus what's happening with the government.
So from what do we know about how he plans on doing this, based on what we know from how he's led other companies, how he's founded other companies, Dana? What's the tension there?
Well, I think that, Musk definitely thinks of efficiency in terms of hours per product or people per product. And so he is definitely looking to cut people. I think that he has done that over and over again with his companies. He is not shy about laying people off or firing them. It's something that he's done on a regular basis at Tesla and at SpaceX for sure. And then I think he also is just looking to delete processes and parts. And so what I think is interesting is, just this week he was like, do we really need the ATF, referring to the Bureau of Alcohol, Tobacco, and Firearms? Can't they just be combined with the DEA? He's looking to really streamline wholesale departments. And that's very similar to the way he is at his companies. This wasn't in the story, but one of the reasons why the Cybertruck is stainless steel is because it's not painted. There's no paint. Paint is often a big part of the automotive process, and they wanted to delete the paint shop. And so deleting processes and parts is a big part of the way that he runs his companies. And I think you're going to see him at least float that idea when it comes to the federal government.
Yeah, I can't wait till they suggest that everybody sleep on the floor to get stuff done, overnight. Having said that, though, you talk to some interesting voices and voices that we respect big time, here at Bloomberg. Gene Munster, a longtime Tesla analyst, respected voice on tech, on innovation. What did he have to say?
Yeah, he just sort of made the point that, if you look at Musk and efficiency, there's really a ledger. On the positive side, he has squeezed incredible productivity out of his employees. And I think that employees would agree that they have never worked harder than when they work for Tesla. And the pace of innovation and the speed with which his companies moves is incredibly fast. But on the downside, there were some operational decisions that ultimately cost the company money. We don't know how much exactly, but the examples that come to mind more recently are, at one point, Musk made a decision to close all the retail stores. And then I think they backtracked from that 10 days later, probably when they realized that they were in some long-term leases that couldn't easily be renegotiated. Firing the whole supercharger team in April, and then hiring many of those people back. Over automating the Fremont plant, and then ripping out all of that equipment when it didn't work. So there have been some decisions that have, maybe were the right ones given the finances of the company at the time, but overall, what was the CapEx cost of that? I don't think we'll ever know, but I just would encourage people to kind of scrutinize this concept of efficiency from a variety of perspectives.
It's a great read, as always. Dana, thank you so much. Dana Hull, senior technology reporter for Bloomberg News. She's out there in San Francisco. All right, folks, that's going to do it for this hour of Bloomberg Business Week. If you're watching on television, the close is coming your way in just a moment. We're going to continue on Bloomberg Business Week on radio, on YouTube, and Bloomberg Originals.
Yeah, DeepSeek's AI success is flipping the script for big tech. We're going to sit down with Ian King in just a few minutes, who's got a great deep dive on how Silicon Valley is thinking differently. Also, Xerox selling off after reporting earnings earlier today. We've got the CEO joining us a little bit later in the program.
And don't forget, we've got Starbucks coming out with earnings after the closing bell. We're going to talk about that, what to expect, and the changes coming that way. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. In Southern California, residents who evacuated ahead of the Pacific Palisades fire are being allowed back to salvage what they can. Chuck Peel's home was destroyed.
Now you just got to say, it's not about what you lost, but what did you find, or where. That's the only way that I think I can process what's going on.
The Palisades fire is now 95% contained. The Trump administration has ordered a spending freeze on nearly all federal assistance.
I think this is a very responsible measure.
White House Press Secretary Caroline Leavitt.
This is not a blanket pause on federal assistance and grant programs from the Trump administration.
The announcement has caused a lot of confusion and uncertainty.
Individual assistance, that includes Social Security benefits, Medicare benefits, food stamps, welfare benefits, assistance that is going directly to individuals will not be impacted by this pause.
Stacey Lynn, CBS News, the White House.
Democrats are livid. Washington State's Patty Murray is vice chair of the Senate Appropriations Committee.
This illegal move is a massive overreach by the Trump administration. The American people did not vote for this kind of senseless chaos.
Several senators and state officials say the online portals used to access the Medicaid health insurance program for low-income families have been blocked. Oklahoma schools are getting behind President Trump's immigration crackdown.
State School Superintendent Ryan Walters has ordered Oklahoma schools to require proof of a child's citizenship or immigration status. Immigration lawyer Lorena Rivas says her clients are worried.
I've been reminding them that their children, whether they're documented or undocumented, have a right to education here established by the Supreme Court.
The proposed law wouldn't stop students without legal status from attending schools, but would require districts to keep records. Brad Gibson for CBS News, Tulsa.
In Colombia, applause as two Colombian Air Force planes carrying people deported from the U.S. arrived in Bogota. The U.S. and Colombia had threatened each other with tariffs before they reached a deal on those deportation flights. ICE agents are conducting raids in more cities. CBS New York reporter Christina Fan says at least one person was arrested in the Bronx.
Homeland Security Secretary Kristi Noem was on hand for the operation, posting a video on X and writing that we are doing this right, doing exactly what President Trump promised the American people, making our streets safe.
The House Oversight Committee wants the mayors of New York, Chicago, and Boston to testify before Congress about their city's sanctuary status. A rebound on Wall Street today after tech stocks took it on the chin after that DeepSeek situation yesterday. Nasdaq's up 384.
TradeMastersHub.com.
Changes could be coming to a map near you.
Google Maps says it'll follow the government's lead and list the Gulf of Mexico as the Gulf of America once the Trump administration updates the geographic names information system. As per the president's wishes, it'll also identify the mountain in Alaska, currently called Denali, as Mount McKinley, in honor of the 25th president, who Mr. Trump refers to as the original Tariff Man. President Obama signed off on Denali in 2015 to honor the mountain's cultural significance to Alaska natives. For users outside the U.S., Google Maps plans to have the Gulf of Mexico and Denali listed alongside the new names. Deborah Rodriguez, CBS News.
Hawaii's Kilauea volcano is spewing lava again. The fountains are reaching as high as 120 feet and feeding multiple lava streams. The eruption began 2 days before Christmas, but it has paused at times. The volcano is not posing a threat to any homes. Michael Wallace, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are just about 55 minutes away from the closing bell on this Tuesday. The Fed kicking off its two-day meeting. We get a Fed decision tomorrow. We've got a rally underway, different tone and tenor in the market. But, you know, you dig into those indices, Tim, and I look at the S&P 500 predominantly. The majority of names in the S&P 500 are lower, about 340 to the downside. And the same thing with the NASDAQ 100, kind of an even split of up and down names. So different from what we had yesterday amid all the selling.
Yeah, but kind of doesn't matter when NVIDIA's up 7% and Apple's up 3.7% and Microsoft's up 3%.
Yeah.
You know, you got big tech really powering the index higher.
Yeah.
Which, speaking of that, we're going to be doing a deep dive into DeepSeek because the startup's AI success really flips the script for big tech. So writes Ian King, who we're going to be speaking to in just a minute.
I'm glad we get another chance to check in with Ian. Xerox, though, staying with tech. Xerox is selling off after reporting earnings earlier today. We've got the CEO, so lots to ask him about as well. And speaking of earnings, we're in it in a big way this week.
Yeah, Starbucks after the bell today. It's going to be the first full quarter under new CEO Brian Niccol. He's made some big changes when it comes to personnel, brought in some folks from his Taco Bell days.
Ceramic mugs.
Supposedly.
Supposedly.
The Sharpies are back, at least in the ads.
Yeah, exactly. All right, so does this like kind of change the way forward? So we're going to get into
Still
it
waiting for the
later.
Doritos Locos Latte.
Ew.
Come on.
No, don't do it. Don't do it. All right, let's get to it. Let's get a check on the trade. Let's turn things over to Charlie Pellet. Should we have a Doritos latte?
Not for me, thank you. And I was in
totally.
Starbucks today. The handwritten cups are back. I spoke to the baristas. They said they've got the ceramic mugs on the way. And right now we have got Starbucks down. I'll tell you why I was in Starbucks and what the message was they had for me. I'll post it on Instagram at the end of the day today. The Dow, they're hiring. The Dow, the S&P, NASDAQ, all advancing right now. We have got the S&P up 55, up by 0.9%. We've got the Dow Jones Industrial Average up 136, up 0.3%, while NASDAQ is up 374, higher now by 1.9%. The 10-year 4.54%, the 2-year 4.20%. Overall, very different tone from this time yesterday. Gold up $24 the ounce, up 0.9%, 27.64, and West Texas Intermediate crude up 0.9%, 73.81 a barrel. Bitcoin right now up by 1%, 102,359 on Bitcoin. Well, a day after the big tech sell-off, and have to be clear, most stocks did rise yesterday. Despite the closing numbers, the slump was largely limited to big tech and AI-related shares. Emily Rowland is co-chief investment strategist at JH Investments.
Yesterday, obviously, was quite a wake-up call in terms of the concentration in the market. The top 10 stocks represent 40% of the S&P 500. I think it's like 39% now after yesterday. That happens when you see $600 billion in market cap wiped out in a day of one stock. But, you know, it's certainly a wake-up call.
Indeed, NVIDIA today up by 7.1%. Recapping, S&P right now up 55, up 0.9%. Tech shares are advancing. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is the Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Really do appreciate it. Shares of NVIDIA rebounding after yesterday's rout at one point up close to 8%. This after yesterday's plunge of more than 17%. It erased $589 billion in value, the most in market history.
It's unbelievable, right? I feel like when it comes to NVIDIA, there's just constantly superlatives of different sorts, but that was certainly a big one.
Ian King is U.S. semiconductor and networking reporter for Bloomberg News. He covers the chips and more. He joins us from our San Francisco bureau. Ian, you write in today's Tech in Depth newsletter about the, quote, revised thinking when it comes to tech companies as they reckon with this announcement from DeepSeek that it's created this new AI model that's perhaps as good as those being offered by the biggest U.S. companies at a fraction of the cost. Was yesterday a real reset moment in Silicon Valley?
In many respects, yes. I mean, there was a frenzy of consideration of like, oh, how should we think about this? And I think one important thing to point out is that NVIDIA, when we and everybody else gave them the chance to respond to this, instead of saying, oh, throwing shade on it or casting any doubt on it, they said, no, this is excellent. And they also said that, hey, these guys did this with, you know, kind of not quite as good chips as you guys can get. So, you know, they almost added to this reconsideration of what's going on, which is basically now framed in terms of, well, if a small Chinese startup can do this with less money and less technology, then why can't you? Why can't you do it cheaper?
Well, so what do you think we're going to get on some of these earnings calls? And I also want to just, with the caveat, Ian, that I still feel like there's some questions we need to ask, you know, this latest development and really make sure that what they say they've done over at DeepSeek, that it really is true. And did they, you know, in any way tap into the OpenAI model? Like, there's still some questions, right, to be answered.
No, there are a massive amount of questions. You know, what hardware did they use? Did they build, you know, the low use of power that and money that they cite to have got to where they got? Was that just one slice of the actual work that was done? Is that a comprehensive? There's any number of different ways that people are trying to sort of pull this apart and find out what really happened and whether this is a true breakthrough moment. But the question will be asked over and over again, instead of like, how much can you spend? How far ahead are you, measuring by these conventional yardsticks that we've, or at least conventional for the last couple of years that we've been using? And now it's going to be, well, should you be doing this? Should you be doing it in a different way? And I think that's fascinating.
So what do you think? It is going to be fascinating, right? Tomorrow you've got Microsoft and Meta reporting, and you write about this in the newsletter, and you remind us they both report financial results, have promised to deploy about $145 billion combined. I mean, it's a lot of money, and we got an update from Meta just last week. Do you think they are going to hedge a little bit? You know, like, what do you anticipate how they handle this?
Yeah, I mean, you know, they have to, I mean, acknowledge the possibility that there is a different way to do things. Otherwise, investors are going to be concerned, to put it mildly, right? This is, when this amount of money is flying around, this is no time to bury your head in the sand, given, you know, the nature of the technology, which is evolving all of the time. And we're also using the technology to develop the technology. And this is part of what is being, you know, offered by this new way of, or this, you know, tweaked way of doing things. So I think they at the very least have to be or appear to be intellectually honest and talk about how they are looking very carefully at what they're doing and the path that they're on.
So apparently you've got this war room, I read, at Meta Platforms where they're trying to figure out exactly how they did this or what they're doing. I assume that's happening at other companies as well. What do we know about how DeepSeek did this versus the traditional method of building LLMs using the most expensive NVIDIA chips out there?
Yeah, I mean, in terms of the hardware, they cite an NVIDIA chip, which is basically a degraded version of an older type of NVIDIA chip, and it was basically degraded so that it would get through the US trade restrictions and then could be shipped to China still. The Biden administration took a look at that and said, no, we don't like that either, so that had to be hobbled yet again. But anyway, these chips have sort of been around since 2023, and that was the ones that they said they used. The other side of it, on this sort of software and training side of it, is, you know, you create these large models which are sort of general purpose, and then you try to refine them. That process of refinement is where they believe they've had this breakthrough, that instead of going through this multi-step, highly intensive kind of process to refine these models. They believe that they've found a shortcut that allows you to get the same level of results for a fraction of the cost. If that's true, if that can be replicated, then that's a game changer.
Hey, I want to ask you about Pat Gelsinger. Recently, but no longer, of course, the CEO of Intel. And he did, you include this in the newsletter, what he wrote on social media, and he argues that DeepSeek's achievement was a triumph of innovation amid constraints. Chinese companies aren't allowed to, of course, buy the most powerful AI accelerators from the U.S. and will help the whole industry grow, including those names pounded in Monday's rout. Is he right?
I mean, this is one of the counter-arguments that he is representing, that a lot of the industry is representing, and is that, look, if you make things cheaper, you're not shrinking the market, you're actually meaning that it's enabling it to grow quicker and to make it more accessible, so that, you know, that this becomes ultimately a bigger pie quicker than it would be if we were on this kind of linear path. That's kind of a reason, you know, it's a 100-year-old argument. I think something called Jevons law, an economics law that is being conscripted here and being used. There's some logic there and there's some proof in that in history, but we're talking new technology here.
Can I just ask you, what do you make of all the backslapping that's going on? It feels like OpenAI, Sam Altman's are all like, hey, nice job.
NVIDIA saying nice job.
Yeah, like, what? And you follow, you know, the tech industry for a long time. Like, I know sometimes they're frenemies, right? They compete, but they work together. Like, what do you make of kind of the commentary that we've seen, Pat Gelsinger and others?
Yeah, I mean, you know, if we focus on what NVIDIA said, they basically gave it the seal of approval. And they also, you know, they have a very specific point here that they want to make, that they've been trying to make all along, which is U.S. trade restrictions will not achieve the desired result. All they'll do is hurt us by locking us out of China. And what they're saying here, effectively behind the scenes, is, look, they didn't have our best stuff. They couldn't have our best stuff. Yet this is what they've done, right? Why can't we sell them everything? Because we might as well. That's the argument they're making, which is nuanced, and I'm not sure how well received that'll be with the new administration. But that's the bottom line here. Other companies, I think they're making this play of being, hey, you know, we're all in this together. This is all expansive for everybody. But behind the scenes, probably quite worried.
You end your piece quoting this long post from Pat Gelsinger on LinkedIn, writing that he's an NVIDIA and AI stock buyer, referring to yesterday, and happy to benefit from lower prices. Can we just pause, Ian, for a second and talk about Pat Gelsinger buying NVIDIA stock?
Yeah, I mean, I'm guessing people in Santa Clara at Intel's headquarters are not going to enjoy reading that. And frankly, that is kind of, you know, they shoved him out, right? Because he couldn't compete with NVIDIA is what they said. And he's saying, well, you know, I'm going to reward who's winning here, which, you know, interpret that as you can.
I'm trying to interpret it, but my mouth remains open that just a few months after leaving his post as CEO, he would write such a thing.
He's moved on, apparently.
I guess he has.
Yeah, I mean, Pat Gelsinger is the heir to the men who founded Intel. One of those is Gordon Moore. We've all been following, you know, Moore's law for decades, which is an economics law. And he's tapping into that. He's saying, you know, this is about economics, and that's perhaps what OpenAI is going to have to face now, which is, well, okay, you own the world, you're seen as a leader, but guess what? If the Chinese can do it cheaper, maybe you don't.
All right. Only, what is it, January 28th? And it's already an interesting year when it comes to tech and semis and AI. Ian, thank you so much. As always, have a great evening. Ian King, U.S. Semiconductor Networking reporter from Bloomberg News. Coming up, Bloomberg Plugged In.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ, and yes, the Russell 2000 index all pushing higher. S&P right now, right to the numbers, up by 1%. That is a gain of 61 points. That index now at 6,073. The Dow up 154, up 0.4%. NASDAQ best level of the day right now, up 410 points, a gain of 2.1%. Yesterday, you recall, we had NASDAQ falling by 3.1%. Russell 2000 index of small cap shares up 0.4%. 10-year at 4.54%. The 2-year 4.19%. Spot gold 27.64 the ounce, up 0.9%. West Texas Intermediate crude up 1%, 73.91 a barrel. So today we are seeing dip buyers coming in after yesterday's AI-fueled sell-off from DeepSeek. Emily Bowersock is the CEO of Bowersock Capital Partners.
This is something that the market's gonna have to digest. You know, I hope it's a speed bump. Certainly, we're still gonna get a significant productivity boost, in my opinion, from AI. So it's really the chip makers and the equipment makers that are gonna struggle. But I think the market's gonna have to process this.
Emily Bowersock of Bowersock Capital interviewed this morning on Bloomberg Open Interest. General Motors, after earnings, now down by 9.3% after the close of trading. We will be hearing from Starbucks. Starbucks shares right now little changed on the day, up by less than 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, it's time now for another edition of Bloomberg Plugged In. It's your weekly look at EVs. And this week, we're talking Tesla because the company reports earnings after the bell tomorrow. And also, it's launched this refresh version of its Model Y in the U.S. and Europe. Joining us now is Kara Carlson, a Bloomberg News EV reporter. She joins us from Austin, Texas. Kara, good to have you with us. We did learn that just a few weeks ago that Tesla's experienced its first annual sales decline in more than a decade. So we have some numbers to go on. What do you have your eyes on tomorrow after the bell?
Yeah, thank you for having me. So tomorrow after the bell is their quarter 4 full year. We did get their preview, as you just mentioned, so we know what their delivery numbers look like, but it's really kind of a look almost ahead as well as what this year looked like for Tesla. So a big thing I'll be listening for, and I think a lot of investors will be listening for, is what comes this year after they had such a, I don't want to say too significant, because honestly it wasn't a huge surprise to a lot of people with the first miss, but it was the first miss in a decade. And now there's kind of a look ahead of, will this growth pattern continue? Will they be able to actually bounce back and start to see vehicle delivery growth again next year? CEO Elon Musk did say last quarter that this upcoming year he is expecting 20 to 30% growth. But there's a lot of skepticism around that number, and there's hope for an update on whether it's going to be 20 to 30% or a little lower, or what they might be viewing this year.
He's going to be on the call?
He's expected to.
Okay. That should be interesting.
From the White House?
That's what I'm curious. Where is he right now? Do we know?
I haven't checked his, flight today, but he's been splitting his time still. He never tends to stay in one place too long. I think he has been in DC quite a bit recently, as people have probably noticed. But he might be back in Austin. I'm not quite sure.
Okay, so it's kind of funny, but there is a real question I think that shareholders have, which is the attention of Elon Musk. And we've talked about this in the past quite a bit, Kara, but I'm curious about your view and what the folks you talked to have told you. Is it all fine and good until, Tesla starts to suffer? Is it all fine and good that he's working on all these other companies, that he's trying to cut trillions in federal spending from the budget?
I think it really depends on who you ask. Tesla is a very unique, some people consider it a bit of a meme stock in itself, where it doesn't always line up with, they're used to him running so many different companies on some levels that it doesn't worry some investors. Other people have said, this could be a bit of a distraction. I think it's really kind of a wait and see moment for a lot of people to how much attention his new initiative ends up taking up. He has other executives that do run a lot of parts of Tesla, so it's not he's been used to splitting his time over the years with his various companies, so it is just kind of adding to that pile.
Yeah, great point. No question the guy can do a lot. He is Elon Musk, after all, and he's figured out a way to do rockets for a lot less expensive than everybody else.
He tends to put, we've talked about this with SpaceX, right? That who's really kind of overseeing stuff. Like when it comes to Tesla, who is the person really, kind of maybe calling the day-to-day shots and really running the company? Is there, remind us of that structure?
There are several people that are, high-ranking executives that do report to Elon. He's very, he's involved still. He is, it's always hard to get a sense of day-to-day where he's splitting his time and between which companies, especially since a lot of his companies are in the Austin area now. So it's hard to get a sense exactly which company he's at when he is in town. But, he does, these people do report to him and he's still involved in the company.
Let's talk a little bit about the Model Y. You recently wrote a story about this new Model Y in the US and Europe that has been unveiled in an effort to revive sales. I was with my brother over the holiday, and Model 3 passed us, and he made the observation that, the design of many of Tesla's vehicles, save for the Cybertruck, hasn't changed much in recent years. Did that change with this new version of the Model Y?
So Tesla did a refresh on the design, so it is the first major changes to the Model Y, which is their most popular vehicle in about 5 years, so basically since they launched it originally. And they did do a similar refresh with the Model 3 actually last year, but this one's been kind of anticipated. They did a few weeks before launch reservations in China to start with, so there was some hype around the design for people who follow Tesla particularly closely. But it was last they launched it and kind of put some more promo out when they launched it, reservations here in the US and in Europe, and people actually aren't going to get deliveries till about March for any of these vehicles, so remains to be seen before those are going to be really out on the road. But
how different is this thing? Is it like car companies really, in the mid part of the last century, they would do huge changes to cars each year. Like you could, you're with my dad and he can tell you that's a 57 Chevy or that's a 58 Chevy or that's a 56 Chevy. They stopped doing that because they realized how expensive that was. So then you now traditionally only see these big refreshes every few years. How big of a refresh was this? And how big of a refresh was that was it the Model E refresh that they did a few years ago you mentioned?
Model 3, I think is, it's always hard to tell because they don't break out vehicle sales by model, as you might know for Tesla. So it's hard to tell, what specifically was boosted if Model 3 did see an uptick after that. Model Y is their bestseller, and so it remains to be seen, just how many reservations end up coming from this. The big changes that you can kind of see as a viewer is more they have this Cybertruck LED light on it, which is the most visually different part of it to most people. And they've had some changes to aerodynamic. They have a camera added to the front. They have a few cameras on the Teslas to start with. So there's been some changes and some changes internally that are a little harder to catch on first glance. It's a fairly similar range, so that's another thing a lot of people were looking for because the China version did have a slightly larger range than the US one, at least at the initial model they have released for reservations here.
Hey,
so there's been some changes.
One thing no, that's okay. One thing I wanted to ask you, and I think about the administration, if they are pulling back potentially maybe on EV subsidies and so on, does in some regards, any kind of reboot or refresh on some of the Tesla models, Tesla, that's their only business, right? It's electric vehicles, right? That's what they do. And in comparison to some of the American automakers who, are still doing EVs, but they definitely have pulled back in a big way. We've done a lot of reporting here at Bloomberg about that. Does that kind of maybe play to Tesla's advantage that, they don't have to worry about the cost of kind of shifting their business? This is what they do, EVs, and might they stand to benefit, especially when it comes to those consumers who are looking to get into an EV?
Yeah, so that's going to be kind of a wait and see moment. Elon Musk has commented on it a bit, and he has said, there is expected impact if that tax credit goes away, but he expects Tesla to see less impact than other competitors because they have a little more volume. They're the biggest EV seller in the country by far, so he expects they're going to see some benefit from just kind of volume's sake. if that does go away, there will be to some degree an impact. It does affect Tesla's pricing. They're still advertising that tax credit pretty heavily when you go and look at vehicles for sale on their website. So, I mean, there will be impact, but it's also at the same time Tesla's and Elon have been seeing this pivot where they're really trying to focus in on autonomous vehicles. They don't have a fully autonomous vehicle for sale yet, but that is the big focus as they go into what they've been calling their next growth wave.
Hey, Kara, we were speaking with Dana Hull last hour about the efficiencies that Elon Musk, sort of his track record with efficiencies at the companies that he's run versus what he has against him or what he's up against at Doge. And I'm wondering about the way that, if at all, he uses different companies that he owns to make the way that he runs his own companies more efficient. For example, do we know if he's deploying XAI at Tesla, for example? We know that he's brought engineers from SpaceX to X when he bought Twitter a couple of years ago. What do we know about cross-pollination at Tesla with Musk's other companies?
We do know this is something he does with all of his companies. He does tend to shuffle, different people around as he sees fit, and will bring different people from different of his companies in if he needs them. I'm not sure how much of that is currently happening at Tesla. It's always a little hard to get a sense. I don't know if XAI is something specifically that is cross-pollinating right now. They have talked before of having Tesla potentially invest in that, but there hasn't been any movement on that since summer. So it's hard to tell if those are having a lot of overlap right now.
All right. We're going to leave it at that. Good stuff and a good heads up in terms of as we get ready for Tesla earnings. Kara Carlson is Bloomberg News EV reporter joining us from Austin, Texas. Looking at Tesla shares, folks, they're just down about 1% here so far in the new year, 2025. We are getting their earnings tomorrow after the market close. And so, some things will be interesting, the commentary around their business. Keep in mind, they've been on quite a run that we have seen certainly in the last couple of years, up about 62%. Last year got a big bump after the election of Donald Trump, and we know obviously Elon's role in the federal government. We talked about that a little bit earlier on Business Week, and it was up just the year before, up more than 100% in 2023. So a lot of expectations there. We'll see whether or not they deliver when they report.
Okay, some of those expectations that investors are looking for. Adjusted EPS, the Bloomberg consensus notes, is 75 cents. The revenue estimate is $27.21 billion. Gross margin, something that's watched very closely, 18.9%. And the CapEx estimate of $2.72 billion. That's all for the fourth quarter.
All right, so we'll be breaking them down certainly after the close tomorrow. Keep in mind that today we get a bunch of earnings after the close, and that includes Starbucks. That's going to be one of the big ones. So we'll see what they have to say. We've also got Chubb coming out after the closing bell, and Qorvo, which has had quite a run this year. It's up more than 20%, the semiconductor device company. So we'll see what we hear in regards to them. All right, a little bit of revving up as we head to a break. Just checking in on the trade on this Tuesday. Just got about 26 minutes to go. You've got the S&P 500 up just about 1 full percentage point. Looking at the NASDAQ 100, a gain of 1.7%. This is Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks pushing higher. Very different tone to the market compared to this time yesterday. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. tech stocks are stabilizing after yesterday's plunge, with the Dow currently up 150 points. S&P's gained 57, while the Nasdaq is higher by 2%. The U.S. 10-year yield at 4.54%. Gold is up 22, oil in the green, and Bitcoin, that's higher by 0.7%. Among the main 11 S&P sectors, leaders were tech and telecom. Utilities were under pressure, and leaders to the upside in the Dow, NVIDIA and Salesforce, while Honeywell fell 2% and led to the downside. After earnings, Royal Caribbean jumped 13%, GM fell 10%, and in other news, Merck is buying back $10 billion. Wrapping things up, some of the names pointing after the bell tonight include Stryker, F5 Networks, and Starbucks. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we are just about 18 minutes away from the closing bell. Charlie and Bill Maloney breaking down the trade for you on this Tuesday. We've got some earnings coming your way after the closing bell, including Starbucks, Chubb, and Corvo. So we'll be breaking them down after the close. We do want to see what our next guest has to say about the market environment, the earnings season so far, everything coming out of Washington, a lot to throw out. Larry Pitkowski, he is managing partner and portfolio manager at Good Haven Capital Management, back with us from Millburn, New Jersey. Larry, good to have you here. There is a lot coming at us. I do want to ask you about the market moves we saw yesterday, the concern in particular about the AI spend investment plays that have really fueled market momentum over the last 2 years. Anything that we got yesterday that was a rethink for you, or was it just a sign that investors might seize on anything as an opportunity to maybe sell a little bit here?
Hey, Carol. Hey, Tim. I think from my perspective, and we do not have any money in any of the infrastructure companies of AI, NVIDIA, Broadcom, and whatnot, but it is a reminder that it is early days in figuring out who the winner is over a long period of time on being the key part of the AI infrastructure. And capitalism is filled with plenty of examples about who were leaders in the beginning and how it ended up, and human ingenuity leading to more efficiencies and figuring out ways to do things lower costs and whatnot. Our main exposure is we are longtime shareholders of Alphabet, and of course their and some of their brethren, their CapEx is revenue for a lot of the infrastructure providers. So, will there potentially be ways for them to find more efficient ways to do things in the, in their AI space, large language models that they are creating, perhaps. But you also have an area where there's been an enormous amount of appreciation in securities prices. And of course, anytime you get, big valuations and, a lot of people jumping on the bandwagon, it doesn't take much to shake a lot of folks out. But, we observe and are reminded that history is filled with industries that can change rapidly. We're more looking for things that we feel a high degree of future certainty. We're also looking for big returns. So we're looking to have it all. And so far, so good. But that is what we took from the perch that we sit at.
I should note the Good Haven Fund, Good X US is the ticker, over the last 5 years has returned more than 16% per year, putting it in the 99th percentile of its peers. Larry, on yesterday, like you said, Alphabet, a big holding, accounts for about a little more than 6% of your portfolio. did you buy more yesterday? Did you sell? What did you do yesterday?
Well, first of all, Tim, thank you for calling out those numbers. Everybody here has been, working very hard the last 5+ years, and we really thank our clients and fellow clients and shareholders for being supportive of what we're trying to do over the long term. We did not make any transactions, based on what was happening yesterday, in Alphabet. So would we've owned it for a long time. Is there a price which we would add? I mean, the valuation has come way down. I think it's something like 20 times next year's earnings if you just go by consensus numbers. We may very well do that. Did we see anything in some of the developments that, led us to feel differently about our long-term fundamental view? And again, we've owned it for 10 years or so, where the answer is no. Do we think it's important to continue to be curious and think about how different industries that we have invested in will play out over time? Sure. And we hope management there is, despite being sitting on top, high up on the mountain, still has a healthy degree of paranoia, because as the great Andy Grove said, only the paranoid survive, and I think that's important. But yesterday's developments did not lead us to do anything, though. Again, more volatility we normally find to be our friend, and we would try and take advantage of it. We just didn't happen to find there was anything for us to do at that moment.
So what would you be buying or selling? Or are you kind of like waiting a little bit here, Larry, in terms of waiting to see a little bit more clarity about policies that come down from the Trump administration, see what we get maybe from the Fed tomorrow? Like, give us an idea of kind of your thinking here of this environment and whether you're kind of waiting a little bit and for what?
Carol, you pay a very high price for a very clear outlook. I think that what you're seeing in the backdrop, as we just posted our new shareholder letter for the Good Haven Fund on our website for all to see. The economy seems to be, decent. Inflation has come down dramatically. Interest rates are kind of where they are. We try not to be macroeconomic prognosticator. It is not what has brought us to the party and helped us achieve good returns, but we would not expect dramatic declines in interest rates. But, the sun is coming up every day, and we are turning over rocks looking for things to do. And we believe outside of existential, really, scary, problematic moments for the economy and the markets, that's what we should be doing. And that what has helped us to generate strong returns. So that's all we're doing. And we're trying to learn a little bit more about the things that we own. And we've been fortunate to find things to look at despite an overall market, again, that is high. And as we put in our shareholder letter, our portfolio is trading at a much cheaper valuation than the market and has had better growth characteristics over the last 5 years. And again, over time, as Tim pointed out, has outperformed. So we will just continue to endeavor to do that and be curious and look for things to do. And we don't need that many.
Larry, I noticed that you're about 19% outside. Well, equities are about 77% of the portfolio. Cash is about 3.5%. The other is government securities. Is that atypical for you, or are you waiting to buy something, or is that typical?
Not waiting for anything except to find more investments that fit our criteria. And again, we need to buy with a margin of safety, and we need to buy things we feel we have an edge in understanding. We like to be contrarians, but we don't desire having some kind of certain amount of treasury bills and cash. We happen to have been fortunate to welcome over the last year and a half, more new fellow shareholders. So we have more cash than we normally would. And by the way, those numbers, which we're kind enough to quote, we've accomplished with, kind of a drag of more cash than normal. But we're happy we've found things to buy recently, and we're happy to do so. Even though we've got cash, and we will not spend it recklessly or necessarily just to lower that percentage.
Hey, listen, we got to run. Larry, be well. Larry Pitkowski, he is Managing Partner and Portfolio Manager at Good Haven Capital Management. We've got about 10 minutes to go until the closing bell and some earnings. This is Bloomberg Business Week.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Carol Massar. I'm Tim Stenovec. And it is
I'm switching my technology.
Tuesday. What are you doing?
I'm getting ready for heading over to our TV colleagues in just a moment. We got
She's switching headphones.
Got wires coming off of me and, putting it in my IFB for TV.
All right.
That's what we
do. A little
do
behind the scenes.
Yeah. You're seeing how the TV sausage and radio sausage is made.
What do you think is going on behind the scenes over at Starbucks?
I don't know. This is going to be an interesting one. This is a big one, right? Brian Niccol, who has taken over as CEO, and the company is adopting some different things. A new model for its retail operations, clearer accountability for how stores perform. Brian Niccol putting out a letter to workers today. Starbucks is splitting the scope of the roles held by some of its key executives, its president of North America and its chief supply and customer solutions officer, who are leaving the company. Yeah.
Yeah, so let's start there because that was from today. Yeah. So here's who the company has hired. Mike Grams is North America Chief Stores Officer, gives him responsibility for store performance and the customer solutions team. Mm-hmm. Meredith Sandland will join as Chief Store Development Officer to lead new store openings and cafe design. Where did they come from?
Taco Bell, which Brian Niccol used to run before he went to Chipotle.
That's why I keep saying.
You know how
what do
it
I
is.
say?
You know, when you leave your different companies, you bring all your team with you. What?
The Doritos Locos Latte.
It's not going to happen. Like
it just needs that crossover with Frito-Lay and Taco Bell, Yum Brands.
The guacamole smoothie? No, I don't want that.
No. It's a different vibe.
Yeah. They've also hired a new chief supply chain officer who will be announced in the next few weeks.
That's a tough job.
Yeah.
Coffee prices?
Yeah. That's a good point.
That's really tough.
Yeah, all of that stuff, like not cheap. And so you got to deal with that.
How do you keep that stuff under control?
In the latest chapter in Niccol's quest to rescue Starbucks, I'm just reading from our story by Daniela Sartori.
In our control room says Baja Blast Refresher. That's a good one.
Nicely done. Brian Niccol's calling and saying, what is Cece doing? Could you help me here? So, yeah, he's got to listen. He's got a lot. They've lost business as boycotts, price increases, and slow service has pushed customers away. Keep in mind, the company hiring Brian Niccol, that was just back in September. He undid some leadership moves enacted by his predecessor. So he's been kind of, listen, it's a big chain. The company's, creator, been there, been not. Like, you know what I mean? Like, I just feel like there's a lot that they've got to kind of deal with and maybe rework and find what's next for Starbucks.
Would you like guacamole with that coffee?
No.
Oh, that's just a reference to his time at Chipotle.
Yeah, no, I know.
Because guac is extra.
Guac is extra.
Yeah.
No, I don't think I do. We'll have to see. I mean, they've been making things about like who can use the bathroom, right?
And who gets water cups too.
And who gets water cups. I mean, I will tell you, full disclosure, I have walked into a Starbucks, not bought coffee, but I have used the bathroom.
What? Did you guys hear that?
Arrest me now.
Carol Massar.
Yeah, that was downtown New York. I had to go. Sorry, TMI.
Okay, there's another story too from earlier this week.
Ceramic mugs.
Yeah, the vibes are different as of this week. At least that's the goal. Workers are going to ask guests if they want drinks for here to go. They're going to offer ceramic mugs for those who want to stay. Charlie Pellet shared with us earlier the black Sharpie was out again, writing his name, no longer printing that receipt out with the name on it. Baristas are more vigilant now about topping macchiatos with a caramel crosshatch pattern.
Made up exactly of 7, not 6, not 5, not 4, not 3, 7 vertical lines and 7 horizontal lines, finished with a spiral.
Ooh, diners get unlimited free refills of iced or hot coffee, whether they're rewards members or not, with some conditions.
Is that in a ceramic mug?
The changes will mark the first major test of whether Brian Niccol can dig the company out of its first annual sales decline since the pandemic hit in 2020. I think one challenge is the coffee industry has changed so much since Starbucks ruled the roost.
So many choices. Many choices out there, especially in these major cities. So a lot of questions we're going to be breaking down that report. We've been having some fun. No guacamole with your coffee, at least not yet. But we'll see what happens. Time will tell.
Just doing some stretching before the Starbucks report.
Calisthenics?
Yeah. You know how it is.
Crazy. Cuckoo. All right, folks, do not go anywhere. We're not going anywhere. We're heading over to our TV colleagues. That's because the closing bell starts right now.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here to take you through the closing bell. A global simulcast starts right now. I'm joined in the TV studio by Bonnie Quinn, Alex Steele, and Scarlett Fu on assignment today. Carol Master and Tim Stenovic in the radio booth as we welcome our audiences across all of our platforms, including our partnership with YouTube. And if you watched us yesterday, it's a huge turnaround from where we were just 24 hours ago.
It's kind of fascinating, right? So here we have green across the screen. NASDAQ really an outperformer, up 1.5%. But if you look at like the S&P 500, despite being up on the index level, you look into the index and you've got most names in the S&P 500 lower, which is opposite of what we had yesterday. A lot of selling, yet most names were higher. So you make sense of this market trade.
I'm not going to make sense of the trade. What I'm going to do is tell you that even though NVIDIA's up, close to 8% today, still got a long way to go to get back to where it was at the end of the day on Friday. About 13% still from there.
Ben Emmons this morning saying it was a golden buying opportunity. I guess that's true, at least for today, but we don't know what tomorrow is going to bring, right? And I would also point out that this whole reversal didn't extend to the Treasury trade, so that flight to quality that we saw yesterday, that didn't get reversed.
We had a lot of guests on this program and, of course, on yours as well, who were basically saying, look, this is an opportunity to buy stocks on sale, high valuation stocks. I guess the question, though, is this going to come back and haunt them?
Yeah, and the earnings throughout the week, tomorrow, and throughout that AI trade, we're going to get some clarity on that and get some questions answered on that.
And we're expecting some earnings after the bell today out of Qorvo, Packaging Corp, Starbucks, and Chubb, just to name a few, as we get the closing bells in New York. Something to cheer about on the day, with the Dow Jones Industrial Average up more than 100 points, or about 0.3%. The S&P gaining about 0.9% on the day. That's a gain of more than 50 points, right back to that 6,067 level as we wait for these numbers to settle out. The NASDAQ composite looks like it's going to close higher by about 390 points, or 2% on the day. The NASDAQ 100 up more than 300 points as well, or about 1.6% on the day. But I think Carol was kind of getting at when you talk about the overwhelming number of stocks in the S&P were down, and you see that reflected in the Russell 2000, in the S&P 400 mid-caps, and in Dow Transports. The Russell only higher by 0.2%, mid-caps only up 0.1%, Dow Transports lower on the day by 0.9%.
Yeah, exactly. And we do have some earnings crossing the Bloomberg terminal. Let me bring it up for you. Qorvo crossing, and let's get right to the outlook.
Looking good.
Yeah, sees fourth quarter adjusted EPS 90 cents to $1.10 a share, way above the street estimate of 88 cents a share. Go back to the third quarter, adjusted EPS of $1.61, folks. That is a big beat. $1.22 was what the street was expecting, and you can see investors, yep, pretty happy. Certainly, if you're a bull on that name, stock's up 12% in the aftermarket.
The company's president and CEO said, quote, Qorvo is executing on a broad set of strategic initiatives to expand margin, generate strong free cash flow, and increase shareholder value. Saying that, this is Bob Brugaworth, saying that during the December quarter, the company continued to successfully support our largest customer, who represented approximately 50% of sales.
Who is that customer? Apple.
Yes.
Thank you.
Well, listen to this, though. Within our Android 5G product portfolio, they're narrowing their focus to the higher value flagship and premium tiers.
Well, you know, Samsung also a client, but one investor that's really important for Qorvo, of course, Starboard, building a 7.7% stake most recently in Qorvo, according to the Wall Street Journal just a little while back. They'll want to see some results, and obviously Qorvo is really putting everything into this earnings season.
And it kind of makes you wonder what the setup is for Apple, at least according to the Bloomberg terminal. About 46% of the revenue coming from the company. And remember, Apple was a stock that was really taking it on the chin prior to this week because everyone was concerned about a potential slump in iPhone unit sales.
All right, guys, let's get to some of the, as we wait more earnings, some of the individual gainers. NVIDIA on that list, a top gainer in the NASDAQ 100, guys, after one day after, seeing that massive rout in its share price and market cap, of course, a record decline by any company in market history. But today, NVIDIA snapping back up almost 9% in today's session. So you saw investors coming back in and doing some buying. Royal Caribbean, also an outperformer, up about 12% at the close, bringing the whole cruise industry higher and among your top gainers in the S&P 500. We did see Royal Caribbean hitting a record today, up the most in more than 2 years. It is the top gainer, as I said, in the S&P. This is after it reported a full-year profit forecast that blew past expectations. Cruise demand continuing to ramp up. We talked with the company's CEO, really outperformance in terms of demand and also excursions, and also now they're moving into river cruises. So they were very, very upbeat about the outlook. They talked about also customers' balance sheets being really good, and so one reason for why demand continues in the cruise industry. CrowdStrike, had to mention, top performer in both the NASDAQ 100 and the S&P 500. Shares, that software area continuing to outperform in the market trade. You had a bunch of analysts talking about B of A, writing that having improved capabilities at lower cost. We're talking about the news that we got yesterday from DeepSeek that essentially if it's less expensive that you could see a ramp up in terms of these software companies, their services, and more companies tapping into it when they want to do kind of AI capabilities. So CrowdStrike really an outperformer in today's session.
All right, some of the underperformers. I do want to start with JetBlue. Shares finished the day down 25%. It plummeted the most ever as the company forecast a weaker than expected revenue and higher costs for the company for the coming year, 25.7% to the downside. Earlier in the session, it was down as much as 29%. Some of the reasons include rising compensation and aircraft maintenance expenses, grounded planes due to an engine manufacturing defect. We talked to George Ferguson a little earlier in our program, who mentioned that JetBlue kind of lives in this area where not a lot of other companies live. It's not an ultra low-cost carrier like a Spirit or Frontier, and it's not necessarily a premium carrier like the big three. And that makes it difficult in terms of pricing and also difficult in terms of marketing. GM shares falling today, finishing the day lower after the company reported a better than expected profit outlook with adjusted earnings expected to range from $13.7 billion to $15.7 billion this year. Look at that, shares down more than 8%. The forecast does not account for potential 25% tariffs on Canada and Mexico, which could impact GM's supply chain and profitability. Also important to note that part of the improved outlook, it's largely due to the decision to shutter Cruise, which is the self-driving car unit, expected to save around $500 million this year.
Starbucks results are crossing the wire right now. The company is saying that its North American comp sales were down about 4%. That was the expectation. In fact, the expectation was for a drop of 5%, so better than expected drop for North American comp sales. Total comp sales in the fiscal fourth quarter also down about 4%. The street was looking for 5.3. The company also saying here that when it comes to operating margin, that came in a little bit narrower than what the street was expecting, about 12%. The street was looking for 13%, though on the plus side, average ticket sales, ticket prices, I should say, so basically the amount of money that you spend every time you go there, up 3%. The street was looking for a gain of about 1.9% here. So I guess somewhat of a slightly better start here for Brian Niccol, as this represents that fourth quarter, his first full quarter there at the helm as CEO.
Yeah, and the stock is up about 4% in the aftermarket. Here's some commentary from Brian Niccol, who was, took over last fall. While we're only one quarter into our turnaround, we're moving quickly to act on the Back to Starbucks efforts, and we've seen a positive response. Although we're in the beginning chapter and have much more work ahead of us, we will continue to prioritize shareholder value through dividends, providing a predictable return of capital while we turn around our business. So, yeah, investors, at least so far, guys, like what they see and are hearing from the company. Again, up about 3.9% in the aftermarket.
And that net revenue figure beating as well, Carol, $9.4 billion. The estimate was for $9.31 billion. We'll see if investors give Brian Niccol a little more time. Interesting, too, Tim, to see that China comp sales were much better than the bad number that was anticipated. So analysts were looking for China's comp sales to be down more than 9%. They were, in fact, only down 6%.
I'm wondering how much you can read into these results, given that it has only been one quarter, and a lot of the changes that the company has implemented did not even happen until this week. I mean, we're talking about redesigns to make the stores sort of go back to their roots. The baristas using Sharpies rather than like a printed out receipt. Doing, I think it was 7 lines of caramel on top of those caramel lattes, like
but
those little details that
but those
supposedly
details
will
matter.
make a difference.
And I remember when he got hired, I mean, he talked a lot about how he spent when he was trying to decide whether to take the job. He was talking about how he just basically went all up and down California where he lives and went into Starbucks and just kind of took note of what he didn't like. And he just said it wasn't an inviting experience, and he wanted to bring that back. And I know some of us who remember kind of Starbucks back in the days, it was a place where you just went and hung out. And now, at least the ones around us here near Bloomberg World Headquarters, it's basically just grab your coffee and get the heck out of there.
Yeah, absolutely. But you think about a specialty in terms of how he kind of turned around Chipotle and thought about the dining experience there and those things. So it looks like, at least initially, investors like what he's doing, and we will see. And we'll look forward to what we get on the call a little bit later on. All right, guys, Starbucks, as we saw, up about 3-4% here in the aftermarket. That's a wrap. Our cross-platform coverage of the close, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol. I'm Tim. Shares of Xerox falling today as much as 13%. Did close out the day lower by about 5.8%. The company did report adjusted earnings per share for the fourth quarter that missed the average analyst estimate, though revenue did beat analyst estimates. We've got with us Steve Bandrczak, the CEO of Xerox Holdings Corp. He joins us here in the Bloomberg Interactive Brokers studio. Steve, good to see you. How are you?
Great to have me. Thank you. Doing well.
Hey, so you said in the earnings release that we continue to see steady progress in our reinvention, reflecting the resilience of our team and initiatives taken to date. Where are you right now in your reinvention?
Yeah, so reinvention is a 3-year journey. It's a 3-year program that we set up, and it's all about getting Xerox back to revenue growth and getting back to double-digit operating profit. And so we're about 2/3 into that journey, but really the important part is we set the foundation of the overall reinvention strategy. The first is getting our core stable and growing again, and we put a bunch of different things around what we do in our operating model, what we do with our sales team, what we're doing with our channels, new product introductions, and so forth. Second piece is we have to get 20% of our revenue that is growing faster than the decline in the print industry. So we've acquired a company called IT Savvy, which is a real IT solution. So if you think about a services-led, software-enabled business, a tech powerhouse that drives productivity in the workplace, that's where we're going. And one of the things we're really...
So diversifying into consulting?
Diversifying into services and software. So if you think about all the different tools that you have in the IT space, we have the ability to bring it into SMB, medium and smaller business units.
Where you have the relationships with the businesses already because they have your printer products.
Bingo. 200,000 clients that we have in that space. And we talk about relationships. It's not that we ship them stuff. We actually people, 10,000 service technicians on the ground inside of the facilities where we have long-term relationships and we're trusted. So we're now bringing other services, things like network as a service, security as a service. Many of these companies do not have the IT capabilities of very large companies like Bloomberg, where they have tremendous IT assets, and they can take advantage of all these technology trends. If you're a school, you're a university, you're a medical center, you're a strip mall, you're a hospital, you don't have those capabilities. So you can talk about AI all you want, but if you don't have the infrastructure and you don't have the ability to orchestrate all that data and serve it up into AI, it's completely useless. So we're excited about playing in that space.
So you're 2/3 of the way into your plans, and I think when it comes to your priorities, your reinvention plan, Steve, it is about that. It's, your acquisitions. How do you want investors to measure success when they look at your company? Right now, investors, if you look at the reaction today, not so keen on what they heard. So how should investors measure your success at this point?
A couple of things. First of all, when you think about a journey of a reinvention, you've got to get your core fundamentals right, and that's what we're doing in the first part of it. So you're starting to see things like 20% sales productivity. We're seeing that. We're seeing double-digit placement of units in the Q4, where you have that where you place a unit and then you see long-term supplies as you go forward. So signs of how do we get our core business stable. Second, the acquisitions. You think about Lexmark acquisition, right?
Right.
When we go and make that acquisition, it is immediately accretive. With $200 million of synergies, about $1 EPS, it's accretive. We'll actually lower our debt. So the acquisition strategy strengthens our core, diversifies our business. The other thing is we have digital services, right? You talk a lot about AI. Digital services is the ability to take data. You think about AI without data is completely useless. Well, we play in that space.
But how much data? I mean, listen, we talk about this nonstop in terms of the power of AI is based on the data it can acquire. Yeah. There are so many data providers, and to be fair, probably bigger than you guys. Yeah. So how do you compete in terms of the quantity and clarity and quality of your data?
It's not the data providers, it's the data that our clients own. So if you think about hospitals, you think about law firms.
So managing their data.
Helping them orchestrate it. It's really important, right? You could have it on physical files where it's paper-based.
Right.
It could be in SharePoints, it could be in all over. Think about things like video. Nobody thinks about data in terms of video. Things like sensor data, right? We help our clients orchestrate all that and then serve it up on top of AI. So we're using the data that our clients have, even data that they don't realize that they need to drive differentiation using AI. So think about video data, right? And you put AI in video data and you sense something's wrong in a campus. Well, that doesn't do anything unless you can have it to the appropriate alert systems. We do that every day with our workflow and our processes.
You mentioned you want revenue to outpace the decline of the actual print and paper business. Yeah. Does that hit a floor somewhere where, yes, people are using more electronic communication, so they're not printing as much, but when does that decline stop?
So two things. First of all, print is not dead, which is really interesting. People look at print, it is not dead.
Look at us. I print the heck out of the world, so
ton of print.
I hear you.
There's a shift, right? Even the badge coming in, right? You think about the badges coming into this inbound in print. So print, even you take a look at UPS boxes, Amazon boxes, we're printing a ton. So print isn't dead. We have to move where print is. When you take a look at CAGR decline in print over the next couple of years, it's 2 to 3% decline. So we want to decline slower than that, so we're actually gaining market share. But the other real thing is when you think about print, there's a tremendous amount of value inside of print. Value in invoices, value in contracts, value in medical records. We can help our clients to unleash that particular data, unleash that power of that data, and actually turn it into something that's actionable. And that's what we're working on helping our clients.
You know, looking at your stock, it's been on a somewhat steady decline. And let me just throw it out. It lost 54% last year. It is up 8% year to date. About 17%, though, of the float is shorted. So there's a real negative skew in terms of what investors expect from you guys. Is part of the strategy ultimately is someone buying you guys out? I mean, have you had interested suitors? Is that it? You know,
no,
because
just the opposite. We're going to be the consolidator.
And I know you've been
industry.
buying, but I'm just curious. Have you had anybody?
No, we want to be a tech powerhouse. We want to drive productivity in the workplace. We've got an incredible brand. You think about Xerox and the history of Xerox. We've got 10,000 plus partners. You don't build that channel partnership overnight. We have tremendous go-to-market assets, tremendous assets in what we do. So no, we're going to be the consolidator in our industry.
Would you explore doing something even larger to kind of scale does matter in this industry?
For sure.
I don't
no
have to
question.
tell you.
Look, I did the IBM PC spin-out, was part of the team that built Lenovo, so I understand what consolidation takes and what it looks like.
Right.
We will be the consolidator in our industry. We're going to be a tech powerhouse again.
How much? Because right now you're about a $1.1 billion market cap.
Yeah.
Like, what's your anticipation of like kind of where you go?
If you think about the market cap today, first of all, we think we're tremendously undervalued from a market cap perspective. You just take a look
Investors
at our assets.
aren't so short
Not
right
yet,
now.
right? But that's okay.
Yeah.
That's why I talk about the reinvention's a 3-year strategy. You know, I'm not trying to build something for tomorrow. I'm trying to build something long-term sustainable growth and something that puts us back in a tech powerhouse position. What I love to see, if you take a look at IT Savvy and you take a look at the partners that we have in the ecosystem, and the reason why they're coming to us is because we can reach clients they don't reach, right? And so when you think about the office space, you think about hospitals, you think about all the places that we service,
right.
We can bring tremendous amount of value by bringing those partners into that ecosystem.
I want to talk a little bit about the balance sheet. Yeah. Buybacks have stopped, dividends on the decline, partly due to acquisitions. Yep. Free cash flow now targeted toward debt reduction. Yeah. How much debt do you think you can pay down over the next 2 years? And give us an idea of your ultimate capital structure goals. And why even keep a dividend at this point?
Yeah, so a couple of things. So first of all, we just recently announced that we cut the dividend in half, trying to get it back to a normal ratio in terms of what would be look like. And so we're really focusing on now is how do we lower our debt? And one of the things that people don't realize, if you take a look at our total debt, inside of that total debt, we have what we call finance receivables, where we have taken leases or we've taken managed print services, put it on our balance sheet. We flipped that strategy a couple of years ago, and we call it forward front agreement. So what happens at the end of each quarter, we have a company that actually buys those receivables. We get that cash back in. And so today, we started that journey, and we had about $1.4 billion that we can actually put cash back onto the balance sheet. We have about 2 years left of that. So that gives us, if we do nothing other than continue that strategy, roughly $400 million for the next 2 years that we put on the balance sheet. And we're using that to drive our reinvention. We're using that to drive our acquisitions. We're using that to reduce our debt. So We lowered the dividend so that we can help pay back our debt. When we do the Lexmark acquisition, we'll accelerate that. It's
So
actually
you
accretive.
pay down how much debt over the next 2 years? Only got about 10, 15
Yeah, the goal is to
seconds.
get around 3.5%.
Okay. Reduction.
Reduction.
Okay. All right. Good to know. We ran out of time. We had a million more questions.
Come back.
Hopefully you'll come back.
I look forward
Love
to
to
it.
hear
Thank you
more
so
about
much
it.
for having me on.
Steve, of course, is the CEO of Xerox Holdings Corporation, joining us right here in our Bloomberg Business Week studio. This is Bloomberg.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. President Trump's AI czar, David Sachs, says on Fox News there is, quote, substantial evidence that DeepSeek distilled knowledge from OpenAI's models. Sachs says if leading AI companies can prevent distillation by third parties, it will slow down so-called copycat models. After hours, we got Starbucks shares now perking up by 4%. Quarterly sales declined less than expected, signaling that the customer retreat that had rattled the coffee chain is starting to subside. Danila Gargiulo is senior analyst at Bernstein.
I think we are onto a kind of the initial recovery signs of the stock. As an anecdote, even going into the Starbucks stores in the past couple of days with a change of code of conduct, I'm actually starting to see already a different environment, a different vibe inside of the store.
And again, after hours, we do have shares of Starbucks now climbing by just about 4%. It was an update for the Dow, the S&P, and NASDAQ. S&P up 55, 6,067, up by about 0.9%. The Dow up 136, up 0.3. NASDAQ was up today by 2%. Yesterday, NASDAQ plunged 3.1%. 10-year, 4.53%. The 2-year, 4.19%. Gold up $22 the ounce, up 0.8%. And West Texas Intermediate crude up by 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. Carol, I don't know, you were listening to Caroline Leavitt earlier of I almost said the Trump administration. She's the White House press secretary.
Right.
You heard that.
A little bit.
She was asked, I know we were preparing for our show, to be fair.
But we were listening, yeah. Because it was the first...
White House press briefing.
Yeah, exactly.
She said that the National Security Council is studying concerns associated with the Chinese AI company DeepSeek. That's according to the White House press secretary. She was asked about it today at her first press briefing.
Yeah, it's interesting, right? And we've had Trump's AI czar, David Sachs, saying on Fox News that there is substantial evidence that DeepSeek distilled knowledge from OpenAI's model.
The dust is settling.
Yeah, well, listen, we talked about this with our own Rachel Metz, that OpenAI, according to someone in the know, a person familiar, that they seem to be looking into exactly how DeepSeek did what they did, and whether or not they tapped into OpenAI's model. So it's interesting. And I think this is part of what we're trying to figure out in the last 24, 48 hours since the story hit yesterday about DeepSeek's capabilities and being able to do what it did in terms of creating a chatbot at a much cheaper, it seemed like, investment input. And so we're trying to understand, did it really cost that little? Are the capabilities on par with OpenAI's ChatGPT? I don't know. There's a lot of questions we're trying to figure out. And what did they use to do it?
That was a point that Ian King also made to us earlier in the program. He said, well, if they indeed were able to use these degraded NVIDIA GPUs that are not subject to export restrictions, then that would be pretty remarkable.
Right.
Because that would show you don't need the compute that you thought you needed in order to do something to this scale.
Yeah, exactly. So, I mean, I feel like there's still a lot of questions and we're getting more information. So there's going to be more to come.
I'm curious what Michelle Gaida thinks about it. She's CEO of the Kroc Institute for Tech Diplomacy at Purdue. She's also former Assistant Secretary of State for Global Public Affairs. She did that in the first Trump administration from 2018 to 2020. She joins us from Nashua, New Hampshire this afternoon. Michelle, how did you look at the news about DeepSeek that really we learned last week, but really came to the fore yesterday?
Yeah, as you guys were just saying, there were and still are a lot of question marks around DeepSeek. In particular, how much did it really cost for them to develop this new quote-unquote cheap model that they've self-reported? Did they do it without NVIDIA chips or the advanced NVIDIA chips? Did they do it without subsidies? So still a lot of question marks. I think the most important thing to focus on is what's ahead. And regardless of whether this was an effort in which a Chinese government had a hand or not, the Chinese government will have a hand in it going forward, because if it is as strategic as it sounds, DeepSeek is a game changer, could be a game changer for the overall AI ecosystem in being able to more efficiently compute than we've done before. And so we can anticipate that the Chinese government is going to co-opt this and start to use it to its strategic advantage for civil-military fusion, where there are no barriers between a consumer app and what China wants to do with the military. And that has implications for our national security.
All right. But at the same time, most nations would say, I'm going to play devil's advocate a little bit, right? The U.S. is trying to be the best as well when it comes to AI, right? This is what just goes on around the world. I'm sure Europe wants to make sure that they are, in the game as well when it comes to AI. I understand not all parts of the world collaborate, certainly on advanced technology, and there are national security concerns. So what's the right policy going forward where a certain amount of collaboration is required, especially, whether it's, nuclear warheads or AI, we need a certain amount of collaboration to make sure that the world can survive going forward.
Yes, you're exactly right. And that's what tech diplomacy is all about, is how do we get trusted partners and allies that includes the Europe and like-minded partners who ultimately believe in freedom, who ultimately believe in the dignity of individuals, who do things like abide by the rule of law. So we're looking for those trusted partners. Europe is a great example. Indo-Pacific partners are a great example. The challenge with China is that they have proven time again that they are an authoritarian state and they have a different value set that they want to advance through the use of emerging technology. So you're exactly right. The more allies we can get behind trusted technology that advances things like liberty and security, the better.
Is there a concern that in this administration we could potentially alienate some of our allies? We saw what happened over the weekend with Colombia. There's a real tit for tat going on there. Mexico, in sending these planes of migrants back, I know, ruffled some feathers there. To the north, potential tariffs on Canada. What about when it comes to parts of Europe with discussion of Greenland, the Panama Canal as well, in the in Central America? Is there a chance that we could alienate allies who might be important when it comes to tech diplomacy?
Well, this is what diplomacy is all about. It's the art of being able to advance your own national interests at the same time you can do it in collaboration with trusted partners and allies who have similar interests. And let's not forget, in the first Trump administration, the founders of the Kroc Institute, Keith Kroc, and Meng Chang at the president of Purdue University, built the Clean Network to secure 5G. That had 60 countries and 200 telecommunications companies all working together to put trust at the center of 5G and not use untrusted vendors like Huawei. So there is a case study on how to work together with 60 countries at least to secure critical technology. And I think there's a similar opportunity to do that now.
So, Michelle, let me ask you, you have some insight, having been a member of the Trump administration, the first go-round. And I'm just curious that the diplomacy that we're seeing so far out of the White House feels like it can be somewhat combative, even to former U.S. allies. You sound like you are arguing that we should be, if anything, reaching out perhaps to our European allies to make sure that we are working together to collaborate on something like AI to make sure that there is supremacy for the United States as well as with our allies against maybe other foes. So how does the diplomacy that we might get, or lack thereof, out of this current administration perhaps maybe is problematic, especially when it comes to something like AI, development, supremacy, and security?
Well, remember that diplomacy is a means to an end. Diplomacy doesn't happen for diplomacy's sake. It's ultimately to advance the interests of the United States. And when you think about the case study with the Clean Network in 2020 and the first Trump administration and what we stand to do now. Remember, it's also really early in the administration. But diplomacy is a means to an end. And so the ultimate measure of success is, did we advance the interests of the United States and ideally our partners and allies at the same time? And there's different methods for doing that. And when you have trusted partners and allies, you can be open and honest and have direct conversations around how you achieve these ultimate goals.
Well, what insight can you give us about, having been part of the first Trump administration in terms of, I think it's fair to say, I've been talking with a lot of CEOs, we have organizations saying it's early days, as you said, in the administration, but how do you, from someone who has some inside knowledge of kind of what is maybe just talk or speaking, kind of harder, and what is the things that really will become actions and policy that will impact businesses and markets and relationships?
Yeah, well, it's always hard to tell. I'm not in government right now. And so the thing to know is that there are generally multiple channels of communication, whether it's coming from the State Department or other agencies, but there are multiple lines of communication. And so all of those things happen together to help advance America's interests. But what I can say is, under this administration, what we've seen so far when it comes to the leading theme for this administration, when they say America first, we've seen that it also means innovation first. And when it comes to artificial intelligence, it means supporting and advocating for projects like the Stargate project that was announced last week, up to $500 million being dedicated toward American leadership in artificial intelligence.
That is, though,
Really
if the
interesting
government, that is if
came out
companies,
right after that.
but that's if companies spend it, right? I mean, there isn't any government money, and some taxpayers might find that to be a good thing. But I mean, having said that, there are questions, even Elon Musk has questioned whether or not the companies have the money to actually spend on that. So if we leave it completely in the private sector, could that be problematic? And if so, what role should the government have in supporting something like AI?
But I think you hit the nail on the head. And the point there is that the government is unleashing the private sector and laying out the vision and the mandate for American innovators, not American regulators, American innovators, to make sure that we're leading in artificial intelligence. And we know through the course of our history, that is how we lead and that is how we win and compete. We will not regulate our way to becoming the world capital of AI. Together with our partners and allies. So unleashing the private sector and launching the next few Stargate projects would be the most effective thing that the government can help catalyze right now.
Michelle, you mentioned you're not currently in government. You were former Assistant Secretary of State for Global Public Affairs from 2018 to 2020 in the first Trump administration. We haven't spoken since the president has been sworn in again. Would you go back and work in his administration again?
It was an honor to serve the first time. My family came here from Vietnam. My father served in the Vietnam War. And so I believe fully that it is an honor to serve your country at any time. But look, the work that we're doing at the Kroc Institute for Tech Diplomacy at Purdue is really vital. We are making sure that we're working with partners and allies in the private sector and as well as with government to make sure technology advances freedom. Purdue is doing extraordinary work, graduating more engineers than any other top university in the country in order to advance national security. So I'm honored to be doing this work right now.
All right, we're going to leave it on that note. Michelle, thank you so much. Really appreciate it. Michelle Gaida, she's CEO of the Kroc Institute for Tech Diplomacy at Purdue, and as we said earlier, former Assistant Secretary of State for Global Public Affairs from 2018 to 2020. So that was during the first Trump administration, joining us from New Hampshire.
Hey, coming up next, how about a little real estate update?
Yeah, I think housing is super important.
It is. We're going to be speaking with Katie Hubbard. She's Executive Vice President of Capital Markets over at Walton Global. It's a really interesting firm. They've got close to $4.4 billion of land under management. What they do is they hold on to it and wait for those huge housing companies to come buy it when they were ready to build.
And then after that, we're going to keep tracking Starbucks, which is up about 3.8% in the aftermarket. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, and NASDAQ advanced today with the S&P up 55, 6,067, a gain of 0.9%. NASDAQ was up 391 points today, up 2%. The world's largest tech companies climbed after a sell-off that shook global markets. Traders gearing up for the start of the mega cap earnings season. Case in point, Tesla tomorrow after the close of trading. Also, a Fed decision on rates. Yes, complete coverage with the Fed tomorrow on Bloomberg. Decision, as you well know by now, 2 o'clock Wall Street time. And yes, Jay Powell's news conference, 2:30 p.m. in its entirety here on Bloomberg Radio. 10-year, 4.53%. The 2-year, 4.19%. Gold, the 2-year, 4.19%. Gold up $22 the ounce, up 0.8%. West Texas Intermediate crude, 73.93 a barrel, up by 1%. Bitcoin today now down 0.4% at $100,913. So what about the market backdrop heading into tomorrow's Fed meeting? Larry Pitkowski is managing partner at Good Haven Capital Management, and he was a guest right here on Bloomberg Business Week.
The economy seems to be, decent. Inflation has come down dramatically. Interest rates are kind of where they are. If we try not to be macroeconomic prognosticator. It is not what has brought us to the party and helped us achieve good returns, but we would not expect dramatic declines in interest rates.
Larry Pitkowski of Good Haven Capital Management, interviewed right here on Bloomberg Business Week. Keeping an eye on Starbucks after hours, after earnings. Starbucks now up by 2.5% for on-demand news 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Well, we haven't talked a lot about eco data recently.
It's kind of
been wild.
I was thinking about getting ready for this segment. I'm like, oh yeah, eco data, Fed meeting. Like it's just all these other things.
I saw Mike McKee earlier today.
Yeah.
And he's on his way to DC right now for tomorrow.
Right.
That's how he rolls.
Yeah.
Maybe he's listening or watching right now.
He'll be breaking down that decision.
Hey, Mike. U.S. home price gains picked up pace in November as buyers remained on the hunt for properties, even in the face of higher borrowing costs. We're talking about the national gauge of prices, the S&P CoreLogic Case-Shiller, rising 3.8% from a year earlier. It was larger than 3.6% annual increase back in October.
All right, so we want to talk about housing, and this is a favorite guest. Katie Hubbard watches all of this closely. She's Executive Vice President of Capital Markets over at Walton Global. They are a privately owned asset and real estate investment company. They've got nearly $4.4 billion worth of land under management, nearly 90,000 acres under management across the United States, and they operate in the retail, industrial, and commercial sectors, but it's a great read on housing in particular. Katie joining us from Denver. Katie, good to have you back with us. We talk to you periodically. How would you describe the housing market and the market for development and building of homes right now?
Yeah, so the year ended high. Carol and Tim, thank you so much for having me. I mean, all of the sentiments were up. Home builders sentiment is up. New home sales are up, prices, and also resale is up. And so that's trickling, as you see, into the Case-Shiller numbers. The reason the prices are up on Case-Shiller is because there is a supply issue. So as we've talked about before, it's definitely regional and it's seasonal. So New York posted the highest gains at 7.2% year over year. Chicago coming in second, just over 6%, and Washington behind that, just under 6%. However, Tampa came in at negative 0.4% year over year, and that's just because of the supply in those markets where Chicago's just over 2 months, 2 months of supply. New York at historical low supply, and Tampa's hovering over 9 months of supply, and so that's feeding into the prices that you see there.
How are you seeing this play out in your world? Because you're very far from the world of single-family homes. You're from the world of large tracts of land that are sold then to the folks who build those developments that have those single-family and multifamily homes. How does the data that we get on a month-to-month basis affect the decisions that you make at Walton Global?
Yeah, Tim, so we are feeding land to the public home builders. That's what we do at Walton. We have over $1.8 billion currently under contract for over 60,000 lots. So we're very close to what the home builder sentiment is, and they need more land. And as you know, we've talked about before, there's an affordability issue. And unless rates drop dramatically, which we know that's not going to be happening anytime soon, or prices drop, and with low inventory, prices aren't going to drop. We need more homes. We need more homes supplied. We need builders to build more homes to keep the affordability in check. And so our largest client is D.R. Horton, the #1 home builder, and they're really closing that affordability gap where 28% of new homes sold last year were sold at the $300,000 to $399,000 price range. So you can see people targeting that affordable house, and that's up in that category to 28% of all homes sold, which is a big jump since 2021.
How cautious, Katie, are builders when it comes to building? They never want to overbuild, right? Because that's going to hurt them. So how cautious? Because I feel like we have been talking about the lack of supply, the lack of affordable housing forever. So how careful are they? I understand permitting and regional variations, but to be fair, how careful? And I understand they have to be when they're publicly held, but how careful are they to make sure that they don't overbuild? And so that maybe holds back supply.
It does. I mean, our builders are the largest, our clients are the largest builders, and they're definitely bullish on what's happening because in order for people to get that home, they're buying down mortgage rates and they need land to be able to build the homes. D.R. Horton's going to build over 90,000 homes this year and sell 90,000 homes, where smaller builders are absolutely more cautious. They don't have the ability to finance land off balance sheet. They have to really build and sell as they go, and so they can't get caught with too much inventory. Where the public builders, they can go to a private equity firm investors and say, hey, we've got too much inventory, and sell chunks of homes at a time if needed, so that they don't go into spring season having too much inventory on their books. So they're watching it closely, but they have levers to pull because they've got very strong margins, and so they've got just different ways, the big builders, in order to be able to manage that supply and control the land to keep building homes and keep that supply coming.
So in New York, you mentioned numbers in New York in terms of housing supply and what's going on. New York Governor Kathy Hochul has proposed restrictions on large financial firms buying homes. State legislators in Virginia and Nebraska have had similar ideas. The idea is that, investors are buying up, reducing the supply. What is your take and what you are seeing? Do home builders want to make sure that private equity is still in that market so that if they have oversupply, they're in there to pick up the homes?
Not necessarily in those urban infill locations where they're constrained. I'm talking about, building large master plan communities more on the outskirts of the core. But as far as New York goes, I would say one thing that is keeping the prices high and supply low is that only 19% of the entire state have mortgages over 6%. So you're really seeing a lock-in rate effect in that market, keeping the prices high.
Katie, I want to talk a little bit about what the federal government could do to increase housing supply in this country. We heard J.D. Vance bring it up actually at the only vice presidential debate, talking about the idea of selling federal lands rather, or building homes on federal lands. Are you thinking about that realistically as a way that the federal government increases housing supply in this country?
Well, we heard President Trump at Davos say that he's just going to demand that interest rates come down. So it's definitely top of mind for them of how they can increase the affordability. We're really at a wait and see with what the government policies are going to do, whether it's tariffs that could cause the material prices to go up, and then that would cause inflation. And when inflation comes in, then mortgage rates will increase. Obviously, they're talking about mass deportation, which there's already a labor shortage. We already can't build enough homes. Building 1 million homes per a year now is difficult because of labor. So if there's an even further labor shortage, that could drive prices up. And then on the flip side of that, talking about, government spending, tax cuts, deregulation, so making building easier. Those are all things where our clients are at a wait and see. We're going to see what happens with those policies. And I'll have to report back on the government selling their land.
All right, good stuff. A big overview, and such an important part, certainly, of the U.S. economy. Katie Hubbard is Executive VP of Capital Markets over at Walton Global, joining us on this Tuesday from Denver, Colorado. Katie, thanks again.
What's going on with Starbucks after hours, Carol? The company did report earnings. It's their first full quarter under Brian Niccol, who joined back in September. Shares higher by about 2.5%.
Right, and we're looking for some additional commentary on the call, so we're going to be tracking that. We're going to talk about Starbucks when we return here on Business Week. We're going to ask our mugs and macchiato art, the way to customers' hearts. You know, those 7 vertical lines.
And horizontal, too.
That's coming up.
Listening to Bloomberg Business Week with Carol Nasser and Tim Stenovec on Bloomberg Radio and Television.
All right, so let's talk a little bit more about Starbucks. One of the big earnings after the closing bell. We've seen the stock rally in the aftermarket, although we should point out that it's off its highs of the session, still up about 2.5%.
Yeah, okay. Investors are happy.
Yeah.
But not as happy as they were a few minutes ago.
No. Quarterly sales, as you mentioned before we got going, declining less than expected, so maybe signaling that the customer retreat that had rattled the coffee chain is starting to subside. But
they still declined.
It's exactly, and that's what they need to stop.
Let's get into it with Daniela
sales
Sirtori.
declines.
She's restaurant reporter for Bloomberg News. She's taking a break from covering Starbucks just for the next 6 minutes to give us an idea of how the turnaround is going. And that's where I want to start. How is the turnaround going at Starbucks with Brian Niccol at the helm?
So we have to take into account that Brian basically only came into the seat in September. So this is really, the first quarter that, he's been CEO, to begin with, that he's given this earnings call. So the changes that he's made so far have been relatively small that actually applied to last quarter. So, a couple of the big things were dropping the upcharge for non-dairy milk, which, if like me, you do not drink milk, is a big issue. And then The other thing was actually boosting the marketing for the company. But, those are the changes that applied to last quarter. And some of the bigger things that he did actually only started yesterday, so we still have a little bit to see how this turnaround is gonna go.
All right, so the stock is up. So what are investors happy about? Just that the sales decline was less than expected, and that's a good thing. It's not a gain, but it's not as bad as it could have been.
And it's not just less than expected, it's also less than last quarter, right? So at least it signals that things are getting better sequentially, that, some of that exodus of customers that they had seen, it looks like they're managing to at least curb it a little bit. Of course, it's not positive, right? It's not like they have won back customers and they're in a path to growth, but at least it's moving in the right direction. And the company has talked about, they're basically going to keep doing this. They're going to, keep rolling out changes, and some of the stuff that they did yesterday was officially rolling out things like ceramic mugs in the stores. Pretty much everyone can get
all right, Daniela,
when they order in store, and more.
All right, we have talked to Brian a lot, and it's hard not to ignore.
Not as CEO of Starbucks.
No, but as an impressive run, Taco Bell, right, Chipotle, ceramic mugs. Although I will say I like getting my coffee in a ceramic mug if I'm sitting somewhere. But are those the things that are going to create kind of a different feel at Starbucks and going to bring customers back?
That's the goal. It's to make the in-store experience a little bit more premium, right? And even if you don't get it every time, the idea is to have a different vibe, right? Like when you walk into the store, even if it's for a mobile order, you get the feeling that it's a place that you might want to spend some time in when you have the time. That's the idea.
It's interesting though, because that brings up other challenges, right? If you are going to be a barista who makes sure to put 7 lines cross-hatched on the top of a certain drink, and you're doing this in a mug that then has to be washed, and you're providing free refills to folks who are in there, all things that Brian Niccol says they're going to do, that adds up.
It definitely does. And so these changes are very, very new. So that I'm going to be talking to, baristas and other people that work in the stores just to see how these changes are going. One of the things that Brian has talked about is adding more staffing and giving baristas more time to do their jobs. We still have to see what that actually looks like, and if he will offset, some of the extra tasks that baristas have to do with maybe more staffing or more time, whatever that means. But a lot of that is still up in the air. So I think it's a very fair question.
Mobile, how important is mobile to the Starbucks story? Mobile was a really big focal point for Brian at Chipotle, coming off of the pandemic, really kind of creating 2 different lines, digital versus, in-store. And many people, applaud what he had done at Chipotle because of that. Is mobile a big deal at Starbucks, and is it also been a problem?
It is a big deal, and it has been a problem. And so Brian has talked about doing precisely what you're talking about now, sort of separating the cafe experience and the to-go experience. He hasn't given a lot of details about how he's going to do that, but he did say that he wants to basically improve the algorithm that gives you, how long your drink is going to take when you order on mobile. And that should help a little bit with making sure that the drinks basically don't pile up, right? That like if you order in the cafe, you're not competing, for baristas like time and attention with the people that are ordering on mobile and like flooding the cafe. So definitely a big focus and something that he is expected to provide more details on.
So just real quick before you go, what about food? Where does, he comes from a food background. What's his thinking on food, and how's that going to look?
Another thing that we are all waiting for details on, but he has said about he has talked about improving the experience, and is of course something that has eluded Starbucks for a very long time. I mean, the company has talked about improving food for years, and so we're going to see what Brian's approach is going to be on this specifically. But trust me, I have been asking.
All right. Well, and we're going to have the call, right? So we'll look for some more headlines coming out of the call.
Daniela, you ask, I'll do the tasting if you'd like. I'm happy to offer
great.
my services.
Sounds like a great arrangement.
Just put it in a ceramic mug. That's all I'm going to say. 2.4% higher shares of Starbucks here in the aftermarket.
Daniela Sartori, restaurant reporter for Bloomberg News. We're going to let her go and get back to reporting on Starbucks. As you mentioned, Carol, shares higher in the after hours.
Yeah, we did have a headline cross. President Donald Trump's freeze on grant funding temporarily halted by a judge. So we know some of the programs that the president has been handing down some of the orders. There are some that have been facing some court orders or at least lawsuits, and so we are seeing a judge halt that.
Yeah, it threatens more than $1 trillion that flows to states, cities, and other local governments. It puts everything from transit infrastructure to housing projects at risk. I can tell you that the folks on Balance of Power are going to be talking about this.
No doubt about it. Yep, exactly. That was a new directive to halt payments of federal grants, loans, and other assistance to an array of programs across the country. But again, federal judge in Washington temporarily blocking that Trump administration order. All right, you are listening and watching Bloomberg.